Welcome back to the Wyckoff Crypto discussion. As usual, this information is for educational purpose only and is not an investment recommendation. Please stop the video and read the disclaimer. A quick look at the Nasdaq and S&P as usual. In the last week, price has spent time in the upper part of the trading range started on July 8th. Small spreads, inability to react, all the elements suggest that supply is very low, so the trend is up. A potential vertical absorption is in play. This has been a quite favorable environment for crypto, in particular the altcoin market, which is starting to outperform Bitcoin. And we will see many examples today. Last week, we have discussed a tactical profit-taking strategy for Bitcoin. We have seen now a small reaction, which could be the beginning of a smaller trading range, a complex backing up action as a local trading range itself, but supply looks not threatening. And the good news is that the altcoins have held quite well during the correction. This behavior is not very evident on the altcoin index chart because big caps and former leaders are still digesting the supply that has come in the past months. So they are absorbing the supply at lower levels. But when you manually scan the asset or look for new highs on specific cryptos, you will find many assets that are performing very, very well, especially new coins, which have not been included in the index yet, but they are making new highs. And we will show plenty of them today. But before that, Roman, your thoughts?
Well, the market itself is still bullish. I mean, like when you look at the chart, the first question that you should be asking, what is the trend? The trend is still up for both Nasdaq and S&P. And then Nasdaq had less of the supply coming in on this reaction than S&P. Holding really well, and I think today is going to be somewhat of a crucial day to see if we could hold at this level. We don't want to see a bar like this that kind of covers the previous up bar completely. That would be obviously more bearish and would suggest that we might have some kind of reaction. But holding like this, like Nasdaq is holding right now, in the vicinity of the previous resistance, would look very, very bullish. We'll talk more about the Bitcoin on the upcoming slides, but yeah, I really am liking the idea that Alessio is showing us that altcoins might be starting to outperform Bitcoin and large caps, which is suggestive of the speculation coming back in small chunks first, right? So more brave traders are opening the positions and more brave institutions are starting to invest. And if this trend is to continue, then more and more participants are going to come back to the cryptos, and that could develop, a much more bullish environment even.
So here we see Bitcoin, daily picture. On the perpetual futures, the volume signature on the last reaction is slightly higher compared to the spot market. This is the spot market chart. But what's more important here is the fact that price is residing in the area defined by the big supply tail on July 26. The last 3 bars to the downside have diminishing spreads, which is a good sign. So for now, it does not look like a threatening reaction. I know that there is a big debate on social media. Is this reaction the final backing up action? Well, the price action for now looks very constructive. There's a good probability that we'll retest this area for a while, creating that small trading range between 36 and 42 that Roman has discussed several times. But I think that the overall price action right now looks very, very constructive. You just have to be good risk manager and follow this price action for the next weeks. Roman?
Yeah, I wish we would have a little bit more time, just because there are so many thoughts that I have about the Bitcoin just in general. So I'm just going to give you flashcards. First of all, we've talked about different areas here where we have lower low area, lower low area, and now we are hoping to confirm that the higher low area is going to come and hold. Hold where? So here's the second flashcard. this bar is the most important bar right now for us. Why? Because we see the availability of the supply, which was very natural to come at this point, and we see that in the volume signature, we see this in the tail. But look what happens next. Next bar, up, and it comes and it covers almost the whole tail. Next bar, up, and then another break into the climactic intraday high. So what does it tell us? It tells us that as supply comes in, demand is coming in as well, and that produces the absorption that we see in the continuation of the price to the upside. Why is this important? Because if we've just experienced absorption, we should be holding on to this level. And what our reaction is suggesting, and the biggest question here is, what is the character of this reaction? And when we talk about the character of the reaction, we talk about the depth of the reaction. We talk about the spread that is, consistent with, let's say, if this selling, what kind of spread do we have? And here on the spread side, I mean, we definitely see one big spread right here, but it's not as big as the up spreads on the upside. And then those diminishing spreads that Alessia has mentioned. And the volume signature is not picking up too much. So it looks constructive. It's holding where it needs to hold, number one. The character of it is not that bearish. And we're still hoping for that, third trading range structure as the higher low. And if this happens, and let's say we are flat here for some time, and I would be even thinking that with this absorption, the trading range that we might have could have a little bit like upsloping characteristics. So it's a small nuance and it's not really like big deal, but it's kind of like an interesting puzzle right now for me. We might have a slight higher high and then go down and kind of like do this first before we actually break to the upside. Now, this break will be associated with a lot of increase of the momentum and demand signature. Why? Because there is a form of trade that is being developed into this area by institutions that maybe are seeing the change in Bitcoin, but still not playing it, still not coming into the position. So as they come in later on into the 50,000, that could produce that type of, formal momentum increase. But first, we need more testing here. We need to observe the remaining supply at the higher level from the stubborn bears that are still thinking that this is a redistribution.
So I've shown this analog on Discord a couple of days ago, and we have to keep in mind that we are comparing here two very different market environments, 2009 and today. In this case, the chart on the top is the technology ETF. So here we see two downsloping structures followed by a trading range in the upper part, leading to a phase of unfolding of volatility to the upside. And very often beginners tend to associate decreasing volatility to periods of lateral price action. Well, not necessarily. Volatility can unfold on the way up, and this is an idea that Roman highlights very often, and I love it because it's so counterintuitive. So Roman, your thoughts on these two charts?
Yeah, I really like these yellow areas because they are showing us the conditions or like preconditions to the momentum. And there were quite a lot of questions about the first leg of the move because it usually happens out of those conditions on diminishing volume signature and diminishing demand signature. The question, which is a very common question, is we don't see the demand, so it's still a redistribution. But the key here is in the prior price volume action. Look at the volume signature here. Does it show a lot of selling? Does it show that the selling is aggressive? Does it produce any type of result to the downside in terms of the commitment or in terms of commitment and follow through to the downside? No. And that is suggestive that the first initial move off the low is happening because supply has been exhausted. and demand with the smaller increases at the bottom or off the bottom could produce the initial push for the rally. After that, what happens is that supply still comes in, and that supply is being absorbed, almost instantaneously. And we see this in both cases. So I really, really like this analog, Alessio, with an idea that we are going to go into some kind of trading range. And I would absolutely label this as a backup action. And with the downslope information, we could say that this is a major sign of strength. And I think that we could do the same here, Alessia. We could say that this is a major sign of strength. I actually like this labeling even more. Yeah, and a backup action. So then phase C, probably we'll be talking about phase C here. Wow, this is a really good analog here. I like it. And yeah, the rest of the continuation of the uptrend right here, this is more of the unwinding the volatility that we had on the way down. And volatility could unwind in both ways, in the trading range type of way structure, or in the uptrend where we see the diminishing upspread characteristics, but selling comes in and it's quickly being observed. So it's going to be interesting to observe. But this is this FOMO trade right here, which we could probably have in Bitcoin, I would say into the 50,000, like somewhere here on the break. Okay, really great analog, Alessio.
Yes, Roman, I had this 20 or 90 day in mind since the beginning, but this week I've been scanning for all the ETF composing the market, and I found this technology ETF, which a very clearly defined structure with that high-low at the end of the phase C, which are very similar to Bitcoin. So I think it's very powerful.
Very, very similar. Yeah, great. I like the rally in Bitcoin off the low a little bit better. But Bitcoin is its own asset, whereas the technology ETF obviously has a lot of stocks in it.
Yeah, so we have to keep in mind that in the previous analog that Bitcoin is a different asset, it moves in different ways. So we are comparing a big ETF composed like an index to a very speculative animal like Bitcoin. So crypto sectors, big caps, small caps, and DeFi have held very well during the short-term correction that we have seen on Bitcoin. Very tight consolidation in the lower part of the trading range, and today we see a small attempt to break the local resistance. A trading range within a trading range. Some traders could argue here that many of these assets are not moving, but actually the fact that volatility is decreasing on the local resistance while Bitcoin has corrected suggests a potential continuation to the top of the trading range. I would be not surprised at all to see a good outperformance by Altcoin in the next days, and this would be in line with the scenario that we have discussed last week. A first leg up dominated by Bitcoin, followed by participation in the altcoin market in the second stage of the accumulation process. And we'll see that single assets show bullish behavior. And so I think that single asset in this peculiar moment will give us a much clearer picture than the indexes. Roman?
Yeah, I think the main idea, I'm not going to add a lot here. I think the main idea that Alessio is trying to convey to us is that this is the time right now for us to look at altcoins and any other alternatives to the Bitcoin and large caps. And it looks like it because the smaller coins, the more speculative coins, will always have more follow through when there is more participation. And the Bitcoin has created enough bullish background for more market participants to come and to start bidding speculatively on more speculative coins. So going to those speculative coins that are usually low cap type of coins is very, very prudent right now. And I'm looking forward to see what kind of scenarios, Alessio, selection we could go through today.
Yes, and this is my favorite slide for today. So we have used the crypto indexes since day one. They have been extremely valuable to analyze this market, but there are instances where you have to look at single candidates to reconstruct the whole puzzle. And the same phenomenon occurs very often in the stock market as well. There are periods where your position, your watch list will give you a better perspective on the market than the index itself. So here we see Bitcoin, Aave, a big cap former leader, and a small cap altcoin on the bottom, which is showing a lot of momentum lately. As always, we want to recognize the institutional presence on the chart. So please focus on the volume signature on the last two charts. We see a lot of volume in late May. CO types are buying on the way down due to the panic selling, and they are buying the leadership, the big caps. It makes sense for big operators to accumulate the leadership, the big caps, during a significant correction. And after that, they are not very active because they know that the market will go through a period of low activity, low participation. So they come back just at specific spots on the oversold condition. Then we see some demand on a minor signal strength for Aave, second chart. And now volatility is contracting. On the other hand, assets like the low cap on the bottom, it does not show a lot of volume during the big correction, which is natural because this asset can go down low volume, but after that we see finally institutional presence at the end of the structure. So if you aggregate the volume both assets, so if you add the volume from the beginning of this big structure, Aave and Alice, you will have a consistent presence of institutions throughout this very low participation market environment. And I think this idea is very, very powerful, Roman. What do you think about this?
Yeah, I love this. I actually really like how you're lining up individual assets based on the cap size. That's number one. And then the whole idea that institutional presence in the structure could be at different spots is very good idea. So where the majority of participation comes is important, and it's suggestive of some kind of specific structure. So, for instance, as Alessia was describing, buying on the way down and then being inactive creates one type of structure. Being inactive and then aggressively buying creates another type of structure. And obviously, we should have some kind of conclusions as to what comes next at the points of the change of the environment and the break and so on and so forth.
So in this case, we see two big caps, so Ethereum and ADA Cardano. I like this idea of the relay race. As the market breadth improves, the leader poses and the other assets recovers to the top of the trading range. This is exactly what we are seeing here on Bitcoin. So Bitcoin was leading Ethereum. Now Ethereum is leading Cardano, which I think has a good probability to reach the top of the trading range and create a minor sinus strength. And I still have my long-term position in Cardano. I entered on the support of this trading range, and now I'm just monitoring the position, Roman, so not adding, but just following. What do you think about these two assets?
Well, I think that I should be adding Ethereum and commenting on Ethereum together with Bitcoin because these are two large caps, and there are periods where there is definitely, a difference, deviation from the structure, and like we're seeing even, short term right here, a much more positive rally in Ethereum, more consistent rally, and then holding close to the resistance, which we would be expecting Bitcoin to do as well. Cardano here, yeah, I would be thinking that the lowest sized cap coins are going to have more movements now, again, because market participation increases. So your idea, Alessia, about touching the resistance and having some kind of acceleration into that resistance, I think is very prudent at this point.
Here we see Wi-Fi, which is leading the market, and we have discussed this asset in a couple of weeks ago, just on that contraction volatility, which was a very important clue. So higher highs and higher lows, and now I think that we could see a potential reaction that could be maybe a major making up action, because now this is a kind of risky point, so we have to wait for a reaction to re-enter or add to our initial position. Roman?
Yeah, you just have to wait a little bit here for the reaction, but the causality of it is just phenomenal. So I would be just, I would be in this particular asset just for that. So it looks just great.
So same big causality for PERP. I really like this asset. So we see here good relative strength against Bitcoin, and right now a lot of momentum. So it's difficult to enter on this asset on the way up. So we have to go on the intraday, look for area of low volatility, because momentum is very, very high. But I think this is a very good candidate for the long term too. Roman?
Yeah, and it could just keep going up even from here without a lot of hesitation, just because those assets that are already outperforming significantly and they've concluded their structures are going to be the most attractive assets for institutions and for retail traders as well.
Cream, higher highs, higher lows, tremendous relative strength. I think that we're creating this beautiful apex. So we're just trying to break out to the upside, and there's a tremendous potential in this reaccumulation structure. So, and very constructive. And I think we are in a position which is very low risk for now. So
yeah, I would concentrate on this rally right here and just say, like, on the breakout, we're going to have the same type of rally. So like one-to-one type of measurement, and that should bring us into the vicinity of the cluster, which will be our target at this point. So the outperformance in this area suggests that this is a good selection.
AXS has been leading the market in the last month. Very interesting asset. Now we are in this very tight consolidation, but please keep in mind that this is a logarithmic scale, so it's much wider than it looks. But I still like this asset, and we have to go on the intraday to look for a point of entries for a continuation to the upside. I know that a lot of momentum traders really love this asset. So, Roman, if we can go to the next slide on the intraday. So I think this is quite difficult to trade because there are like this period of inactivity followed by a quick jump to the upside. But today's price action looks like a spring to me, so a local spring at least. So
yeah,
what do you think?
Yeah, I mean, definitely, I like it. I like it a lot. Just predominantly because of this rally that comes, because of this bullish reaction that comes afterwards, in comparison to the Bitcoin where everything is going down here. So that is an element of strength, and that materializes. That strength materializes in this next rally that is just so strong. So again, in the moments in the market when everything is weak, but changing conditions to maybe more bullish conditions, you got to figure out the assets that are having more strength and chase those, because those are going to produce this type of returns. Also, just on the structure of the Bitcoin here on 4-hour, this is the most important bar right here. We're still holding within the body of this bar. So we're still testing it, and look at the latest test right here. It was definitely, very, very bullish looking test.
Yeah, I really like the way we see those spreads to the downside on Bitcoin, the previous chart. So now Constellation. So we have mentioned this asset in the last Wyckoff crypto discussion. You see that a very constructive making up action that we're seeing right now. So I think this is a possible point of entry on the daily chart, which is quite rare with this kind of high momentum asset, because usually you have to go to very low time frames Roman?
Yeah, supply is coming in here. We see that in the volume signature. We see this in the supply tail. Reaction follows, but then the next approach to the same area has a less supply or almost non-existent supply, and that's why the price is holding here, suggestive that there's going to be a continuation.
So we have received this submission. This is a very small cap, but it's performing very, very well. So I really like the way we are jumping up and out of this consolidation right now. Just to keep in mind that these are very small caps. So they move in a kind of erratic way. So please be careful with your stop loss, or at least with the size of your position, which in this case, I think is more important. Roman?
Again, a very interesting asset, obviously low liquidity. We see this from the wicks, from the texture of the spread itself. So if it's going to move, it's going to move a lot. My attention would be on the conclusion of the runs into the resistance, because this is where we are right now. And it seems that before we had more supply, more volatility in this area, that increase in volatility and increase in the supply has been resolved through the diminished volume signature, and look at the spread to the downside here. So it looks like it's ready to continue its move to the upside, so well positioned.
Super USDT, so a lot of participation in the last rally. This is the principle that we have highlighted today's discussion. So institutions are picking these low caps because they probably see that the market is recovering, and this is a good sign. I think the only question here is that we have to see how the breakout here will develop, because I think we could be still in the middle of a much more complex trading range with a prolonged breaking up action like for Bitcoin. So we have to be very patient, but I really like the structure. I really like the volume on this asset. Roman?
I wonder if we might have more of the trading range right here. So that's the only question that I have here. Just because the way of how the rally unfolds reminds me more of the rally in phase B. Having said this, there is nothing stopping us here of just like breaking through. So I think it's tactics here. Would we have some kind of stop buy orders on the way out, or would we just wait for more data? So just, yet to be seen.
Tomo, in terms of comparative strength, I like the last rally that we are seeing right now. So this upsloping structure, and then an upsloping breaking up action on the top of the first trading range, which looks very constructive, especially when you compare that to Bitcoin. My only concern for this asset is the fact that we see quite a lot of volatility in the first half of the chart. So I wonder if that volatility is warning us that the asset needs more time to digest that supply. But right now, I think that it's constructive asset, remember?
Yeah, really constructive. I like the higher low in potential phase C. The backup is also, as Alessio has said, this upslope in higher highs, higher lows type of structure. I like in the trading ranges, the rallies in the middle of the trading range that are showing strength. That's a precursor for more strength after the test of this rally. So any type of breakout strategies here, I think, would be viable.
And we could even think of a downsloping structure, a big downsloping structure from the beginning, from mid-April to today. I think this could be very interesting. So basically, yeah, something like that. Yeah. And we clearly see here another downsloping structure which is developing here. So this is another very small low cap. So we have to keep in mind that this asset generally moves in a very erratic way. So they have quick jumps, then reaction, a period of low volatility that can even take weeks and weeks. So I think that we could just use a small position for these low caps and enjoy the ride. But the price action looks very constructive for now. And I really like the way we see this first accumulation structure on the bottom, and then a second rally that forms a major silent strength above the prior structure. So quite good. Roman?
Yeah, I think it's just the character of this asset, as Alessio described, like going up, down, going up, down, going up, down. So you kind of have this type of behavior. So if you trade something like this, then you should be coming in at this points and at this points. Those should be your points of entry. So analog them, to the historical points of entry. And just use them so that you're just increasing your probabilities of being successful that way.
So final assets for today, and typical low cap structure with a low volatility on the bottom, and then a quick rally with a constructive reaction to just a 50% correction, followed by a vertical absorption pattern. And right now we're trying to make new highs. So I think that we can follow this asset because the structure for now is constructive. I think that there's an alternative scenario where we can spend some time below that resistance and create another unnerving trading range apex formation. This is still a possibility, so we can even look for symmetry here. But for now, I would just go with the momentum, Roman.
Yeah. And again, we haven't talked about this. We kind of talked a lot about in the downtrend and in the most recent consolidation about tactics, which we said the best tactic for now was to trade. So for instance, in this environment, like where we had this call to the downside in Bitcoin, starting from that and coming into, let's say, what we have right now, this is all trading. Now, I would say that from now on, we are okay to do the long-term investments. And obviously, you have to go through the selection. And today's video is really good on the selection. So thank you, Alessio. But I also think that the environment is changing enough for us to start holding on to our positions for the longer duration of time. And I think the more bullishness we see, the more this idea of the long-term investment selections and staying with that in a more like buy and hold longer type of pattern is going to be more dominating. What do you think about this, Alessio?
Yes, I really like the change of behavior that we are seeing in the whole market. This is the most constructive data for me in general, because okay, we can establish small trades in these small caps, but the fact that the market changes behavior, it's constructive for the long term and can really change our trading style according to the environment. That's the most important idea here.
Okay. Is there anything else that is left for us? That's it. Okay, Alessio, your final thoughts?
Yeah, so we have shown today many small caps, and trading small caps is usually more difficult than trading big caps because big caps usually move in a steady way. So managing risk is crucial. But I think the overall perspective here is quite constructive. So I think could really think in terms of campaigns right now. And if you're trading on the intraday, please look for area of low volatility because trading momentum is quite difficult for beginners. And that's it.
All right. Well, thank you so much, guys. And as usual, thank you so much for good discussions on Discord. And we'll talk to you next week.